Hi everyone, it's Frugal here. As always, I have my coffee because otherwise somebody might just get killed. So let's talk today about making money through rental property. So there's a couple of ways that you can make money, and look, it can be lucrative. But as with all investments, don't just go and, buy the the nearest share, the nearest property. You need to buy something that you understand. So look, it is a bit of money that you're going to have to spend. I will be honest, it is not something that you just need to go and say, well, here, quickly just, buy and be happy. There can be maintenance involved, that you need to budget for a couple of things, but it can be absolutely worth it. So in a nutshell, the way that this works is like this. You basically buy the property, somebody rents it from you, and you get a monthly income from them. So, furthermore, obviously, your income is taxable, so you need to declare all of your income and all of your expenses. So there are different ways that you can handle it. For example, you can have a bond. If you have a bond and you basically then take the money that you're making through the rental income and you pay it back to the bond, generally you get to what they call tax neutral. That's sort of where you want to be, or just above that, that you just make a little bit more money. Now, in this current climate, I would say, in my opinion, to make property profitable, you need to have it about at a 1% rental factor after all expenses comes off, at an interest rate of around about 13%. 13 to 15%, I think, is a good bet. So, for example, that is obviously with your bond. If you're not bonded, if you just don't take that into the equation at the moment, I would say if you have a 400,000 Rand property that you bought it for, you want 4,000 Rand a month in your pocket after all of your expenses. That is your levies and your rates and taxes, your parking spot, and all of those actually comes off. Then it is actually, like, I would say, an okay investment. People will tell me, like, is this possible? I'd say yes, because I have some of these. I actually do have some of these properties. So the thing is that yes, you need to do your calculations, but also you need to decide what is your strategy. So obviously, like, you can up your expenses so that you become tax neutral, but the main thing about rental property is that somebody else is actually paying off the property on your behalf. So you're using other people's money. You're not using your own money. You're basically using somebody else's money, the rent that they're paying, to pay off your property. And that is the beauty of it. That is what you want to achieve, is actually not using your own money. Because if you invest your own money, you only have that little bit of money that you have. But if you do have other people's money, it really does help. Remember, it doesn't, it's not like it's, what's the word? It's not risk-free. You sort of do need to have a property emergency fund, and I have a very nice one because I just want to be extra safe. So, because things happen, you need to repaint the place, you need to tile the place. Your property might stand empty for a month or two. If you've done your research, it's normally not more than a month or two because people tend to like the areas that you're in. But you sort of need to make sure that in case a COVID happens or something happens, that it's going to be okay. So, when it comes to property and rental income, yes, there's expenses that goes up. Yes, the levies goes up. Yes, your rates and taxes goes up, and your normally accordingly, and I've done my calculations over the long term for about 15 to 20 years, I find that the rent increases by about the same. They don't increase about the same every year, but it evens out in about 15 to 20 years, where the increases in the levies and rates and taxes and all of these things actually do even out in my calculations that I've done with my properties. And I've done it in a really, really terrible property, which I had and I sold. But look, there's other things as well that you need to consider. There are wonderful tax breaks like Section 13(6). Yes, I said that magical word. And you can actually write off between 50% to 100% of your property value of new or unused properties. There's also special tax breaks like Section 12J, which is for more your high income earners, where you get your tax back for the money that you invest, similar to what an RA does. You also get Section 13 Quat and Quin, which is for special areas where they want to see rejuvenation of an area, and many of these big people will go and they'll buy a block and they'll make it in beautiful flats, sell it for a fortune, and you get tax breaks on those as well. So there are many ways that you can make money, and you need to decide on the structure and how you want to do it and in which way you want to do it. But there's ways that you can make money. You don't have to make the money, you don't have to do it. But there are ways and there are opportunities for you to make money in South Africa with rental property. So now that you know more about rental property and making profit, have a wonderful day and happy investing.